All right. So sorry guys, I was having some issues with some technical difficulties there, but let's get started to this. Let's go back to like the top. Actually, I'm all going to be talking about really quick about ARV. Uh, Let me start off over here. So first things first, welcome everybody to another series, another event where we're going to be analyzing some deals out there that are on market for wholesaling. It could be both for fixing and flipping, or it could be for buying and holding as well too. But some of the things that we're going to be learning really quick before we do some analyzing is understand some foundations. This is going to be the first foundation over here when it comes to like analyzing any deals. It's going to be the ARV or after repair value. Basically, how much the property is going to be worth once it gets fully updated and it's going to be on market, listed up again with the fully updated materials. The only thing as well too that concludes with the ARV is pretty much knowing like your market. I'll show you guys how to find like your market in just a couple of seconds, thanks to the help from Zillow and also Redfin, where they give you some data analysis to help you expedite like your process on how much could potentially properties sell for if you're doing like some fixing and flipping, or if you're bringing fixing and flipping deals to investors. How to find the ARV, which is always shown again in every series. It's just a matter of seconds of getting that information and how to use it as well too. The other thing too that we have to consider is repairs. When it comes to repairs, when I analyze repairs, I'm more detail oriented, but when it comes to like wholesaling, it pretty much sticks down to like the basics or these basic price per square foot repairs. Um, the reason why is because at the end of the day, it really comes down to like your investor if they want to spend the money and put more do more luxury repairs, or if they want to do like the minimal stuff and be very inexpensive in terms of like the repair expenses. But looking through the repairs, it's pretty much standard on light repairs are going to be more appropriated to rental properties, a single family or multifamily, or prop and also properties that are just really well maintained. It's going to be very minimal stuff. Average repairs, this is more diving into properties that are fully project type of properties where you find an ugly house and then the investor's going to come in and fix it up, do a 180 on it and pretty much resell it on that 180 price point, which is going to be pretty much your ARV. But this is going to consist of more areas of the property, uh, major floors, repairs, kitchen, bathrooms, lighting, paint, maybe siding as well too, if it depends on what kind of siding the property has, or painting the outside, possibly some landscaping, minimal landscaping stuff, and also uh, windows and possibly the roof. So again, these are going to be more average repairs. These are going to be like the most numbers that you're going to be using if you're coming across a lot of properties that are fixing and flipping. Unless you come across the crazy, super ugly ones that are dismantled, and there's only two options to go with this. You either demolish the property or you demolishing the property, it's just take down everything except for the foundation, or you strip down the property internally. So you bring it down to like the studs, and then all the materials and everything gets updated from there, from however it looked to again bring it over to 2024 standards. These are going to cost between $45 to $60 per square foot. Going back to all the repair price per square foot, if you happen to be like on major cities, San Francisco, LA, Dallas, Miami, New York, Boston, Seattle. Again, you name them big cities. Those, except for Chicago. Chicago is still very inexpensive out there. But those major cities that are very expensive, not just the cities, but also like the states. I would add $15 to $20 more per square foot on some of the those type of repairs on those major cities, because again, those are more expensive cities and market areas overall. So add $15 to $20 on top of these average price per square foot. And again, don't spend a lot of time analyzing it. Just figure out, does it need very minimal stuff? Does it need average stuff? Or is it like a full nightmare type of property? And again, if needed, add those $15 to $20 per square foot on top of these prices overall. Um, Looking into comps. Comps are going to be pretty much down to figuring out how much can potentially the property sell for in terms of dollar value. So when you're looking at comps, not just properties that have sold, you want to make sure that you're comparing apples to apples. You want to make sure that you're looking at properties within the square footage of the living space, plus or minus 300. If you come across a property that has acres, quarter of an acre, half, 1, 3, 5 acres, you name it, then you want to compare more of the acre size of the property than the property, but also consider the property square footage as well too. When you're looking for comps, you don't actually have to stick within a radius, but I like to do so because what you're going to come across is major roads that have like double yellow line roads, kind of like this one as an example, where there's going to be a constant flow of traffic from commuters, buses, semi trucks, delivery trucks, construction, you name it. It's just a major area of flows of traffic that are considered kind of like the border of a neighborhood. So whenever we're looking into comps, we want to stick within the same border, outside border of the neighborhood, where all these major roads are going to be like outlining that neighborhood specifically, because when an appraiser analyzes and looks for comps, they're going to stick within the neighborhood. They won't cross it. They won't cross these major roads whatsoever to pull a comp that is on the other side of a neighborhood at all whatsoever. They're always going to be sticking within the same neighborhood. Looking into the properties as well too. Again, comparing apples to apples. Make sure that you stick within the same years of the property. So a plus or minus 10 years of a difference. If it's 1950, you're gonna go down to 1940 to 1960. So those are gonna be like that's gonna be your a range of years. And again, going to the comps, you're always going to be looking at what has sold, but also look at what's under contract at the moment, because what has sold in the past is telling you how the market reacted historically. What's pending under contract, it's basically what's happening right now with that market in whatever market area it is that you're located at. And also, what's for sale? Look for properties and especially if you look at the history of the sale history of the property, if it sold 6 to 8 months ago and you see it getting listed again, that's going to be a fixed up property reselling right now. And depending on how long it's going to take for it to resell, usually 30 to 60 days. Um, then those properties are also you can also use those properties as well too, because again, that's somebody else that pulled they did their comps and they're or estimating how much the property can sell for, and then maybe it actually was valued more and they're selling for more as well too. So it's when it comes to selling the property for investors, it's a plus or minus game, and when it comes to the repairs, it's a plus or minus game. But as long as you do some small due diligence and confirm, which I'm gonna show you guys in just a few minutes, how to confirm if the property can sell at X amount of ARV value, then by all means, it should be pretty simple on getting your property that you have under contract sent over to a interested buyer. So just a small amount of due diligence, and eventually over time you're going to be enhancing like your skills to like pull different strategies, because when it comes to like wholesaling, you're pretty much analyzing for either fixing and flipping it, buying and holding it. But there's also some creative finance stuff out there as well too. That if you don't know about it, then again, start expanding your horizons on analyzing deals in different strategies. Because again, fixing and flipping might be good. Or I hope you know how to analyze your deals in terms of like buying and holding with a rental and expenses, with NOI and the cap rate and a bunch of other analysis details on that. But eventually just start building your analysis, because again, this will open up your doors for more opportunities with other investors that just don't do any fixing, or they're just specifically fixing and flipping, or they're just specifically buying and holding. So it just opens up those opportunities. And if you happen to have, if you're an investor yourself, or you're a buyer, or if you're a wholesaler, or you want to JV like on a deal, you can text me uh, any information, or email me any information that you have, or that you want to share with me, uh, so that way I can see how it is that I can help you out if you happen to have like any deals or any other questions from there. But nonetheless, let's just jump right into the analysis. Let's close this down. If you happen to have like an address, or if you want to we did California just yesterday on what was it, Sunday. So anywhere outside of California, uh, if you happen to have like an address or a county that you want to analyze, or you're trying to look into like wholesaling, make sure that it's a state that is legally abiding to wholesaling as well too. Um, you can drop the address or the county in the chat. Uh, there's a request. Phoenix, Arizona. Okay. What's the county for Phoenix? Is it Maricopa County? With Pace Morby and everybody, all other, yeah, Maricopa County. I got you. All right, let's do Arizona then. Let's check it out here. So Maricopa County, it's definitely very competitive. Um, there's there's major other wholesalers out there. I know about five of them. Biggest one, as we all know, if you don't know, is going to be Pace Morby, and his team. Um, but let's see what we're able to find. And let me do Maricopa County, Maricopa County. All right, here we go. So I am analyzing deals that are on market because there are some deals available on market still to this day in a lot of counties. It's all about determining what makes like starting to wholesale awesome. So hey, if you're starting to wholesale, that's amazing. You definitely got a great journey ahead, a lot of learning. So definitely be a great sponge and absorb a lot of information and do it quickly because again, you if you're looking at this county, it is definitely very competitive. But you can do certain things to edge your competitiveness. To it. So first thing first is step number one. So if you're starting up on a brand new investing or wholesaling, is know your market. Knowing your market is pretty much knowing how much potential can property sell for, and that's what I was talking about earlier. Is knowing your market or your ARV is knowing how much can property sell for. The cool thing is both Zillow and Redfin, both of these companies are broker companies, which they have their own real estate agents within their own company, and that's why they have a lot of access to the MLS, the major listing system. Um, for properties. So then what I'd like to do is they provide you some information right over here. So if you scroll down past all the properties, you could head over to this section where it says nearby Maricopa City counties or city homes. And it's going to give you the name of all the cities in the county. Sometimes it misses some of them. So you can search per city, whatever city you want to check it out. But Phoenix is our request for today. So it's going to be right there at the top. And what I like to do is I like to highlight all this information and basically and I like to copy it. So I'm gonna do copy, a control copy. And what we're gonna do with this information and what this information concludes of is basically um, properties that are ugly, properties that are newly constructed, and properties that are getting fixed up and flipped. It's a mix of all those properties from Zillow, same thing with Redfin. It's a mix of all those three, and it puts it into this nearby average value home. So how much properties are selling for, so AKA the ARV for that specific city. So with this information is basically telling us this is the potentially how much the home that we're looking for in a specific city can it sell for. So in Phoenix, Arizona, homes can sell for 431,000. It can definitely be more, it can definitely be less. So all we have to do whenever we find a subject property is confirm, can my property, if the property is at $200,000 or $350,000, whatever the price is, can my property sell for 431? Can it sell for less? Can it sell for more? Or can it sell at that a specific price point? So that's what I have to do is whenever I'm looking at a deal is confirm, can it sell for that amount? And what I like to do is bring it over to the CRM or this Google Sheets spreadsheet, and I like to paste this information over here. I'm gonna paste just the values. And on the left side is the potentially the ARV of the properties, and what it's on the right side is a potential offer. The offers get calculated by multiplying depending on the strategy. So if you're looking for a lot of fixing and flipping properties for your investors and buyers, then we got to multiply the ARV times 70%. This is not including any repairs. It's just multiplying literally 431 times 70%, and it's going to spit out this number of $302,000. So it's going to do that for all the properties. Again, this is excluding repairs. Because some buyers just buy at 70%. They don't, again, it really comes down to like knowing how your buyers buy as well too. But because I'm looking at the whole county, I can look at the bigger picture, and you see the bigger picture average on the whole county, they sell for 418, and I got to look for properties at 205. But because we selected Phoenix, oh, I went a little too over, too up. And the reason there's multiple properties over or multiple counties is because these are some of the ones that we previously analyzed. But also, if you start expanding like your skills and you're exploring new counties, it's always good to know how all these counties do. And I like to update them at least once a month, so that we can see our prices going up or our prices dropping on properties. And so because our request is Phoenix, I got to look for properties that are selling less than $302,000. So now all these properties that I'm looking into in Maricopa County, I have 17,800 results. I can even do that over here also in a PropWire. PropWire is a free subscription based platform. You really don't have to pay for anything. The only you have to pay for is if you want to skip trace people or homeowners. County. Oh, oh, what's going on? What's going on? Oh, here we go. Maricopa County. But we're going to be setting some filters that I like to set. So first things first is the price point. So $302,000. Awesome. Next is home types. I'm going to deselect all these and just look for houses. Next, I'm going to be looking for, I don't want new construction homes and I don't want any auctions. Auctions always go above asking. So I'm gonna take that off from Zillow. And I like to look for properties 1,000 square feet and higher. That's pretty much it. So just by setting those specific filters, the price point, the home type, and taking away new construction auctions, and then the 1,000 square feet and higher properties, then from there we literally drop from 70,800 results to 118. Awesome. So 118 opportunities. And these are listed with agents. So I can do two things. I can build relationship with agents because agents look for off-market properties to list them on the market. So they're doing cold calling, doing the marketing. So I can build those relationships, or to just put myself as the investor or partner with all these other partners that are buying and fixing and flipping, and just bring an offer in. So those are my two routes. I can set those filters for Redfin, the same filters that we did on Zillow, set them for Redfin, and also set them up over here for PropWire, which again, it's a free subscription-based platform. So $302,000 or estimated value. Yeah, we'll go with $302,000. Bam. And then let's go for property filters, square footage of the building, 1,000. And then bam. And then the cool thing, so all these properties on PropWire that are going to be popping up, these are going to be properties that are off market. So we have a total of 68,000 results. So again, that's being off market. And like I was mentioning, you don't have to pay for anything. The only thing you have to pay for is if you want to skip trace like a property. So let's say this one, it's probably being slow because again, we're getting 68,000 results. Like look at that. If somebody wants to buy that property, the owner over here, all you do is press skip trace and it costs 10 cents to skip trace the homeowner. And I can also set up owner occupied, so make sure like the owner is in there. And then owner type, I like to do individual, so that way I don't want to make sure it's not a trust or an LLC. I want to make sure it's like the actual homeowner inside the property. And um, again, the more you filter it down, the more specific you get. I can even zoom in more into like the cities or anything like that. There's like a little once I start zooming in, I'm able to like draw as well too. There's a little draw button on the top left corner on the map. So I can draw specific areas as well too, because maybe some investors like specific zip codes from there. So um again, it's just we're getting a bunch of results because again, these are going to be properties that are off market. These are not with agents unless I start putting into it. I want agent MLS listings, then I can add that into it. But I'm just looking at off-market properties. So PropWire off-market, Zillow and Redfin are on-market deals. So I'm going to be analyzing some on-market deals because I want to see pictures of some of these deals. And again, we like I was mentioning in the beginning, we can definitely find some on-market deals um, both on Redfin and Zillow. So we have 118 on Zillow itself. Now let's start looking at what it is that we're getting offered and what's going on with some of these properties. And also location. Definitely location is very important to try to figure out what's going on. Anything less than $50,000, I'll tell you off the bat, it's usually going to be like it's either going to be like a trailer park or like a mobile home. And also it can also be a fire home as well too. Once we actually found a home that was a fire home that was selling it was wholesaled. It was sold for $20,000 like 2 months ago, and the wholesaler was trying to wholesale it. They're trying to wholesale it for how much? I think it was like $180,000. So again, there's other strategies that you can do, but anything less than $50,000, it's going to be either a mobile home or a fire home. Um, we have this $95,000 one, but it's all the way out here in the skirts. So I'm gonna look in specifically like in the city of Phoenix because that was our area. So we got a total of 22 results. So let's check out these 22. This is a mobile home. We have this home right here. This one's not bad. 15 square footage. Very few pictures. Okay, so we have a hole in the house. I'm not sure if there's meteors falling out here in Phoenix, or if there's still aliens out there that are just trying to crawl through the roof. But this one doesn't look too bad. It's just that major hole. Automatically, this looks like a gut job type of repair. So you go back to the repairs. It's going to be this one, that between 45 to $60 per square foot. Um, So this is going to be definitely a major repair. It's very small as well too, so it's not going to cost like a lot. But let's take a look at the numbers, where our numbers are going to be lying. And are we in Phoenix? So we are in the city of Phoenix. And again, going back to our CRM of potential ARV, the first thing I gotta ask myself is this property selling for $215,000. Can it sell for $431,000? And that's what I gotta look for comps. So I'm gonna duplicate the tab. I'm gonna go back to the search area, and then now I'm gonna zoom in specifically where my property is. Um, and I'm gonna start taking away the price point of how much they can potentially sell, but I definitely want to start setting up the filter of the square footage. So I was mentioning it's gonna be plus or minus 300. So 1115 minus 300 is gonna be 800 and some change. But we don't have 800, so I have to go down to like 750, and we're gonna go plus 300. And there's no 400, so I have to go to like 1500. On the square footage. And just by looking, our properties right over here on Carlota Place. We have a $300,000 property just a few blocks over. This definitely looks like a fixed up property. But let me double check. Yep, it is. They didn't do anything major like on the driveway or like this patio stuff, but internally I already know for sure. Flooring, lighting, doors, windows, paint, kitchen. And this is a little bit bigger as well too. It is a 3 bedroom, 1 bath. Our subject property is 2 bedroom, 1 bath. Um, brand new refrigerator where they left the sticker in there on how to install it or install something. That's a pretty, I think that's the knocking. You knock like on the door and then I think the little minions like hide inside of her. Windows, they still have like the I think they have like the tape on it still, but this is a fixed up and flip property right over here. We can always confirm by looking at the history really quick to see when it was last sold. Oh, would you look at that? So it was sold on March for $200,000. And then 3 months later it's getting relisted for $300,000. So, and then this looks amazing. Um, this looks really amazing for they probably did like $50,000. That's very low margins. Like, what's going on with this? Maybe they did like $30,000 worth of repairs. The house won't sell for more than 400. Yeah, just based on the neighborhood. I mean, we have this 361 over here that was listed for this is almost the same square footage as ours, 340. Um, this one is 360. Is it a fixed up? Yep, there we go, another one. Actually, no. What? What happened here? Listed, sold, remove. It was a rental property. That's up for 314. Oh, this could be possibly a good subject to if there's a loan. And you see, this is why Maricopa County is the pays Morby's freaking place. So let me check out here this property. If there's a loan on this property, yep. Oh, it's very small too. Only $160,000. Hmm. There has to be another loan too, though. That makes no sense. Listing history. Okay, mortgage history. One. That is so weird. Why is there's only 36% equity on it, but such a small loan? That makes no sense. That makes truly no sense whatsoever. And over here it says that estimated value is 253, but it's listed for 360. But why is there such a small loan with such a small equity? I think it's the price point, the estimated value of it that is getting messed up. This would have been a great subject too, but again, this is another fix and flip property selling for 360. So this is what I have to do. Let's go back to, let's analyze like the deal really quick on the numbers. So 1115 square footage, price point of 215, 215. 1115 on the square footage, no basement, repairs. Um, it's between 45 to $60. So like $50,000 worth of repairs. The investor's gonna want 20% profit. So it has to sell for 344. Um, and 431 is our potential ARV, but so far from two comps that are for sale right now, this one is at 340 per square foot. 340 per square foot. And then the other one is, what about this one? This 330. Another one, 330. So there's three properties in the same neighborhood selling. This one is it's at 274 per square foot. 274 is right over here. Let's see, is this a fix and flip? Sold in June. Why are these? Does this one have a loan? Come on, one of these have to have. This one is stripping me out for whatever freaking reason that it's has such a small equity. 100% equity. There's no mortgage on this one. History. Oh, it doesn't even have the fact that it sold not too long ago. That is weird. So it doesn't is that's not even fully updated at all whatsoever. Um, and so that's 274, and then the other one is 330 or 300 for 241. Man, so we have a mix over here. So our ARV from just those three comps that are for sale, that are properties that are really in well shape and that the shape of getting fixed up and flipped. From those three comps itself that are for sale is 317. But the biggest thing that's going to confirm it is what has actually sold and what is under contract. So let me look for properties that are under contract, if there's any in the area. I think it was this one. This one is pending at the moment. 320, 960 square footage. This looks like it's a family-owned property. This was selling for 333. It's been listed for 30 days, so that's been sitting already for a while. This one, 900, four bedroom. This is not updated, but 375, and this is pending. Wow. Okay. 370, 417 per square footage. So this is the thing with Maricopa County. It's like a mix. It is a huge mix of investors out here whatsoever. So you know what? I'm gonna stick with the tradition of what's actually selling, what has actually sold in the area. And let me zoom in specifically to like our properties over here. And let me go to like the highest. This $400,000 one, it's outside of our neighborhood, so let's move that up. This sold in January. Okay, that's two. This sold in March. Actually, let's go to the newest one. June, 275, 778. That's pushing it too much. There goes our property right over here, that 260. Now it's reselling for 330. 258 for this one. Okay, so this sold for what's the square footage? 258, 500 divided by 1200 square feet. So 214. Now I'm pushing it down way too low. Our 241's over here. Yeah, this one is a little bit crazy. It's really mixed up over here. There's ugly properties that are under contract for $380,000, but then there's fully updated properties selling for a lot less than that. So it really comes down to buyers, honestly. It comes down to interested buyers that are like that fully decide what materials they want to do. Some of the what materials they want to do, how the market is reacting as well too. So again, all markets are gonna have their own not markets yeah, pretty much all markets are gonna have like their own twist on it. Again, especially Maricopa County, it's a very hot market as well too. So it's definitely about setting like your steps. So the first step is know like your market. Just by analyzing those properties in itself, just one property is giving me like a bunch of crazy information. So to make sure everything, if I'm starting new as a wholesaler, I want to make sure that everything flows as easily as possible. That's why step number two is start building relationships. Again, you can start building relationships with agents. They're probably going to give you like a lot of feedback of what's happening in the market. Especially again, if you're talking to them, like my partners or I, we're interested in buying some properties over here. We are looking at this property you have listed, but what else you have? And again, we're new to this market, so what can you tell us about it? They can give you some feedback on what's actually happening from their experiences. So build relationships with agents, build relationships with buyers. Your buyers definitely get a good amount of buyers just because again, Maricopa County, it's a very hot market, and possibly other wholesalers as well too that you can probably partner with, and title companies. Those will be my four type of people that I will look for to start networking with to make sure everything flows very smoothly on this Maricopa County crazy market. Just because just because what I'm seeing so far is just a mixed, very huge mixed spectrum of price points, repairs, and what people are actually buying as well too. Um, And right now I'm literally looking for what has sold the most recent so I can make sure I pull it up. But I'm gonna stick with the comps because some of these comps that I pulled on the price per square foot recently sold a couple months ago, three to a month ago. So I'm gonna use those. So for this example, if our ARV, I'm gonna say it's $320,000 for this property. And if a fix and flip investor wants to work on this deal and they want to spend $50,000 worth of repairs and they want to make 20% of profit on this deal, then this is where an investor will want to buy it. They'll want to buy it between $173,000 to $188,000. Our property is listed for 215. So I'll definitely, and if I want to wholesale for like a $10,000 wholesale fee, I gotta get it below under contract below this price point over here. So I'll try to push for like 150. I know it's gonna be crazy low, but hey, that's literally what the market is telling me. And I'd rather play it safe on the market than playing it very aggressive down to like where the investor's gonna be losing this money. And if I'm bringing an investor a deal that is on market, they definitely want to get like a discount. Again, this is where they will push it themselves, but I will want to push it even more to again build the relationship of trust and let them know that, hey, when I bring you deals, I definitely got deals as well too, because I did my due diligence very well and I want to make sure that you make some money, but at the same time that I'll be making some money. And their profit on this deal again is going to be $50,000. 48 to like 50. It could be more, it could be less as well too. Again, understand what kind of margins they're looking for on any single deal, so that way it really makes sense to them as well too. Because if you go to the CRM, um, to the CRM's calculator, let's walk backwards on how the investor will look into it. So the seller is asking $215,000. We did some small due diligence. The property can sell for 320. The investors could have spent $50,000 worth of repairs. Right? Yeah, $50,000 worth of repairs. So this is how much they want to buy it. Let's say you get under contract for um 100 and what was their parameters? What would they want to buy it at? Oh, 173. Let's say you get on the contract for like $165,000 and you sell it to like your investor for 170,000. Again, not a big fee, but it's just again it's all about building relationships as well too. And then right here on the right side, it tells you potentially how much you gotta get on the contract. So you see 165 is definitely reasonable as well too. You can push probably the wholesale fee and then come down to like 170. So once do the assignment of contract for 107 imagine 1.7 million. 175, so you're making a $10,000 wholesale fee, but you still negotiate with the buyer. They pay the closing costs. They do the repairs. Their full initial money invested into the property is going to be $241,000. They resell it for 320 in the future. Probably takes 3 months, 4 months to fix it up. So we're talking about we're in June right now. So we're talking about October, November. That's when the property is going to be selling. Maybe interest rates might be better, so the price can be a little bit more. That's why in the beginning I was talking about it could be a plus or minus game in terms of both the ARV and also the repairs as well too. Agent fees, 2.5%, buyer and seller's agent. Closing costs, in all reality, closing costs could be like 3%. Their revenue is 294, but what they spent is 241 all in with your wholesale fee included. So they make a $52,000 profit, which is an ROI of 21%. So their margin is $52,000 on this deal. If they're satisfied with that, cool. If they're not, then again, that's why you have to want to build relationships. Go back to step two and build multiple relationships with different buyers, because all buyers are going to be calculating their deals very differently. And additionally, too, whenever you're looking at a deal, I know I analyzed it, but before analyzing, spending like what we spent 15, 20 minutes analyzing this deal and trying to understand, like for me to understand like the market on just this one property, I wouldn't spend the time analyzing. I would just go, as soon as I see the property, bam, reach out to the agent. um, off the bat and talk with the agent, figure out what's going on. Why does the seller want to sell? And um, why do they want to sell? How quickly they want to close, if anything, and are they open to like negotiating as well too? And then ask the agent what other properties they have listed as well. Um, so that will be my conversation before I start analyzing the deals. Again, I know I analyzed it because I'm trying to understand like the market. So if you want to spend the time knowing like your market, you can just look at one property and try to figure out how it is. But again, it's just always best to take action and reach out to the seller if you're trying to find off-market properties, or if you're looking at on-market properties, then reach out to the agent as well too to get all the information. Uh, as much as possible, trying to figure out what it is that why they want to sell, how much do they want to sell it if it's off market, and how quickly do they want to close as well too. And again, if they're open to negotiating as well too, because some sellers or some sellers and some agents they have to follow the seller's request, but some sellers are really firm. So if it's listed for 215 and I ask the agent if it's negotiable, they're like no, it's I don't take it offensive because it's the seller's request that they're not willing to negotiate. They don't want anything lower than $215,000. So it's like, all right, cool, then let's move on to something else. What else do you have that looks like this, but it's not listed on the market just yet? And from there, just again, build the relationships, especially on if you're on this market. By all means, like I said, build those relationships first before you start analyzing a specific property. Just get in touch with whoever owns the property overall. Okay. Um, if you, I'm gonna leave it open for some questions. I know that was a lot of information, but you guys can drop any questions on the chat, or you're able to unmute yourselves if you have like any questions or anything that you want me to retouch bases on overall. Or if there's another request of another market area or a property, if you have like a property that you want to get analyzed, we're not stealing over here. It's just more about analyzing if you feel like stuck on something. There's an address. Okay, let's see. What's going with this? So we got an address. Awesome. So let's learn from this. Let's see what we can learn from this address over here. Thank you very much. Is there any other information on this property? I'm guessing this is an off-market property here in Arizona. Let me cancel this. Let me duplicate that. Is this like a property that got inherited and the kids are selling it? Is the seller interested on selling this property? Or do you have like any information so far? I know there's no pictures and this thing is taking a while to load up. It did sell last year. So if I'm seeing that off the bat, I'm gonna be looking for a loan. See if there's like a loan on this property. There is. So here we go. This is a great subject to property. Only 9% equity with $545,000 of estimated loan balance. How much are they asking? 650? 675? No other information. I'm throwing some guesses out here, so I truly don't know what's happening with this property. If you have any other information at all whatsoever. But based on that loan amount, this is a creative finance deal. And so possibly their estimated loan monthly payment is 3321. How much can it rent for? Let me go through Zillow rent estimate and let's see how much can it rent for. Can rent out for $3,000. Ooh. So you definitely have to work a creative finance deal on this because the mortgage is pretty much the monthly rent on this area is pretty much the sum up of how much the mortgage monthly payment is. Oh, okay, gotcha. 3,700. Gotcha, gotcha. Uh, so yeah, so this will be, I mean, somebody who was interested in buying like this property, then by all means, uh, it will be like somebody means like an offer in. That's what I was asking, like how much is the seller asking? Probably like 650 or 675, especially bought out like in March of last year. There's very low equity. The the monthly loan to it wouldn't really make sense for an investor to come into it unless the only last hope will be Section 8. So having like a Section 8 tenant, um, the way you look it up is you type in the county, so Maricopa County, AZ, payment standard 2024. That'll be like the only thing that will make sense for an investor to come into like this property. And how many bedrooms we got? 30. Yeah, so I think it was like a 5 bedroom. Yeah, 5 bedroom. So there we go. The fair market rent will be 3,300. So yeah, it really wouldn't make sense at all whatsoever, especially with the major loan. There's no room for Section 8. There's no room for Section 8, and then there's no room for like the market as well too. So this will be one that we'll just have to like move on out of whatsoever. But if somebody were to be interested on selling it, they'll probably just hold on to it. They'll probably lose some money, especially with the high interest rates right now. Unfortunately, it doesn't give us the percentage as well too, but I'm pretty sure it's still gonna be last year March. What were interest rates like last year March? I think they were still high. I think they were probably 780, 7.7, if I remember right. But yeah, it's just this property wouldn't really work for an investor at the moment if there's any offers at all. And if you get offers, like they'll probably be and most likely they're gonna see um, that loan to it. And so that's how much they want to buy like your property for. And if it makes sense to them to just hold on to it, let it it's more like a tax write-off type of strategy for this. If especially if it's in a great area, then the property can definitely pick up equity. So they're buying it very at a very low cap rate. And for those who don't know, cap rate is basically helps you identify I will say risk to help you understand it. It's more like a risk. So the lower the cap rate, the riskier the investment, but it does pick up a great amount of equity down the line. So 20, 30 years, it can definitely pick up a great amount of equity. Um, but there's a but with this, so with that type of strategy, if it's they're buying at a high risk and their market rent is like below what the monthly payment is on the mortgage, then it's more like a tax write-off type of strategy for an investor to take on this. So that will they'll take the losses, reduce their tax bill, reduce their tax income as well too. But eventually the property will pick up a significantly amount of equity down the line, especially if it's going to be just by seeing 5 bedrooms, I know for sure it's definitely like a great housing area. I don't know if there's HOA as well too, but it's just these are going to be one of those properties that you hold on to it, but can definitely pick up equity very well overall. So thank you for the property. I really appreciate it. That's more analyzing it in terms of rentals. And if we were to look at this a rental, there's the rental calculator right there popping up. Give it a second. Log in. What do you mean log in? I don't need to log in. We need no repairs. Um, let's say they're asking $650,000. Almost tied right there. $650,000. Let's do a 15% loan because you get a better rate at 15% down payment. What are we at? Convention loans. What are convention loans right now? 7.2. So I can probably get six and a quarter. 675. Closing costs. Let's do 3%. No repairs. Down payments, 30 years. Conventional rents. Um, oh, I don't have like a 5 bedroom one, so I'm gonna put it as a 3 bedroom. We saw like the most it was that it can rent for was it 3,300? 3,300. Again, the monthly payment just on taking out a loan in this property, we're already losing some money. Um, so 3,300 on the rent. You multiply 3,300 times 12 is going to give you a gross income of 39, but you also going to have expenses. Um, what are we, Arizona? I think I have my taxes. Where's Arizona? Home insurance, Arizona, 0.95. Okay, where's the calculator at? Estimated repair costs, closing costs. Where's the calculator? Oh, let me put this into the calculator. Or let me look for like a property worth $625,000. I just need to look at the I need to look at the numbers really quick for this so I can know my appropriate tax percentages and all this numbers per month. All right, so I put a 6 and a quarter, 675. Price point 650. Let's say we settle down for 650. 15% down. Taxes or insurance was 0.43, right? All right, what was it? What was it? 0.95. 0.95. 0.95. And then the taxes was, let's go to the taxes. Arizona 0.62. Awesome. Oh, almost got it. 0.62. So my monthly payment will be 49.64. Jeez. So my taxes is gonna be 336 per month. Let me break down my expenses down to the dollar. So 336 per month. Uh taxes home oh there's HOA for 185, 515 homeowners insurance and mortgage insurance 345. So mortgage insurance 345, 515. There's HOA for 185. That's what it says there. All right, 185. Cool. Maintenance is going to be 8% of the rent. So if the property, whatever is it renting out, if it's 3,300, multiply that by 8%. It's going to give us 264. And then the vacancy is going to be 10%, so 330. And then same thing for property management, 330. So our expenses are crazy high. Like, because the reason why is because we have um the less than 20% down payment. There's the mortgage insurance. Um, and so that's the only thing that's going to drive it up like a lot more. And there's also HOA included into like the property. So the way it goes is we have our gross income of $39,000. We subtract all of our expenses. We can break it down or place it by dollar percentage. $27,000 in expenses. What is that? Like 60%? Yeah, it's pretty much 70%. Wow, that's crazy. Um, so we have our all of our expenses. So our net income is $11,940, but we have one more major expense, and that other major expense is the monthly mortgage payment, which is the principal and the interest. Multiply that number by 30, by 12, which is 12 months in a year. It's called debt service. So mortgage or debt service is the same thing. So we're losing $31,000 on this property itself, or we're losing $2,500, $2,600 each single month. So the property is being bought at a 1.84% cap rate. As like I was mentioning, the lower the cap rate, the riskier the investment. But again, the property can definitely appreciate over time significantly. Um, so average cap rates in Phoenix. I think I spelled Phoenix wrong. So the average, so this is showing me multifamily. Let's look for single family. Apartment. No, let's put it in here. Single family homes. Let's see. Single family cap rate by property. Let's see what it gives us right over here. So average is 6.74. So this is way, way below. So, and this is where you want to, let's say, what was it? 6.74. So let's push it for 650. So I need to buy the property at a 6.5% cap rate. I need to buy this property for $183,000. And that's for sure not going to be happening at all whatsoever. Even like at a 5% cap rate, not even happening. 4%. Still, that's half, almost half the of the price of the property of what it's actually selling for it to make sense for us to rent it out. Because the reason why is because where the rent is, if we're renting it out for $3,300, it's called the 1% rule. Whatever the property price is, you will multiply 1%. You have to rent it out to the 1%. So if it's selling for $560,000, we have to rent out the property for $5,000, $5,600. But the most that we can get for this property is 3,300. So we have to buy it for pretty much $330,000 um for it to make sense. For us and then for it to bring some money in as well too. Because the minute I change this to 300,000 or $330,000, you guys can guess it. It's gonna bring in some money in. 15% down. Um Pretty much everything down to like the same. The expenses I have to like separate let me see if it allows me to change it. Let's change the price point. I don't think it will let me. Oh, okay, cool. 171, 180. So everything's cut up in half. 171, 175 property taxes, 171 insurance. How much was it? 132 something. 261 and 175. 75 insurance, 261, HOA stays the same. Maintenance stays the same because it goes based on the rent. Vacancy stays the same because it goes based on the rent. Property management stays the same because it goes based on the rent. Now you see, now we're getting closer to the average cap rate on the property. We start losing some money, not a lot, but again, over time we can raise up the rents, raise it up little by little or once a year basis. But that's now it starts making way more sense. But again, it's just on a great market area where it's already pushed out to its limit. Um, yeah, my pleasure. Glad I can help you out, understand on some of this. Uh, and this is what I'm talking about when you analyzing some deals. If you're trying to wholesale buying and holding, this is pretty much the way you break it down. How much is the property selling for? Again, it's going to be most likely it's going to be finance. Unless you buy the property cash, then you're making money from the beginning. But most of them are going to get financed, conventional loans as well too. And again, the government gives more incentives on people who put less than 20% down. Just give you guys on the inside of that, you can do more research. But the way it goes is how much the property is selling for, how much can it sell, aka ask yourself the 1% rule. If it's selling for 300,000, 400,000, $1 million, multiplied by 1%, the property should be renting out for that much for it to make sense. You can break down your expenses by percentage or break it down to the dollar exactly, especially if there's HOA into your those expenses. Then it's going to give you your gross income. Your net operating income is pretty much subtracting all the expenses combined of the 20,000 from the gross income, which is going to give us our net. But from our nets, we have to subtract our mortgage, which whatever the monthly payment is on just the principal and interest, multiply that by 12. So 1,800 times 12 is going to give us 21,000 and some change. And you subtract that on top of your net income. And if it's positive, you're going to see how much a positive is for. If it's negative, then it's going to be more a tax incentive as an investor type of property. And there's another thing called DSCR loan, debt service coverage ratio loan. So if it's less than one, the DSCR lenders won't let you borrow it. So if the investment is more than 1 point, then they're definitely going to be interested on buying it. Sometimes some of them do like 1.1, 1.2. So it really depends on the DSCR lender or debt service coverage ratio lender. So if this one, they wouldn't lend me anything, so I have to go the traditional route of getting a conventional loan. So if it was making me money, then they will definitely be funding it. If it again, if it was greater than one, but because it's less than one, the DSCR lenders won't let me borrow any of it. And the way you will add your wholesale fee into this, into like the properties that are being sold, or if you're wholesaling a multifamily or a rental property, then I want to add like your wholesale fee, but you have to like first things first is get the property in the contract. Depending on where it will make sense, know how much or know the average cap rate of the area, seeing where the numbers are lining up on the results being calculated. And then from there, you can just adjust the cap rate number to where it will make sense. I usually, if the cap rate for example, if the cap rate over here is 6.74, again, I would want to push it up to like 10 and then slowly come down to like 8, maybe 7.5, and then try to sell it to like an investor. Uh, what is it for 253 for like a $20,000 wholesale fee because that's how much they're gonna end up buying the property for, um, or the assignment of contract because again the average is six on this one is 6.74, so they still make some money out of it, you know. Uh, so or I can stick to my standard rule of like 10,000, make it easy 10,000. Again, build the relationship, focus on relationship building, and then from there, um, just continue having that. If I happen to come across another opportunity where they might be interested on taking that into taking another rental property or a single family fixing and flipping, whatever it is, you know how to do both of those type of calculations into your analysis. But I'm gonna leave it open for some questions. I know the buying and holding is a little bit more complex. It's like a lot of calculations being put into it. You're like, what is this? What is that? How do you calculate this? It does take some time to learn. So if you have more questions about that, again, this is your time to ask any questions. Where I leave the mic is open to you guys. No questions. Everybody's ready to hustle it out. Make some calls to agents, sellers, wholesalers, buyers, um, title companies. You guys are pretty much all set. Okay. All right. Well, then that's pretty much the wrap for today. If there's any other questions, again, you guys are able to uh, text me. If you have like any deals or if you have any other questions, you can text me at the number on the screen. You can email me as well too if you have like any properties or like under contract that you're trying to get rid of. If you're an investor, you're looking for some deals. Um, Text me, let me know where it is that you're looking for because I am connected with quite a few wholesalers from other market areas. I know about 5 Midwest market areas and also California as well too. So text me, email me, anything else from there. If you guys have any other questions or again need help with anything, or if you happen to have like a deal, no analysis though. I'm not gonna try and analyze any deals out there. I need you to get if you're joining these, it's because you're trying to learn. But now that you learned something, let's put into action, get out there, make some calls, get some deals done, and If you happen to have something, then by all means, let me know. Uh, of course, my pleasure. And the next event will be on Sunday at 10 a.m. Pacific Standard Time. So if you want to come back and join, or if something pops up that you have going on, then like I said, let me know via text or email. And I'll see you guys on the next episode on Sunday at 10 a.m. Pacific Standard Time. Thank you guys for coming, and I'll see you guys. Enjoy your rest of the day.